everything has a cost. Nothing is free. 10 years, it's $400,000. Over 20 years, it's almost $1 million. Single person is so completely different. And that's the big part about financial planning, is you're trying to reach your financial goals. Hello everybody, Stephen Evans here, and today I want to talk about a strategy that we use for some of our clients. So what is this strategy? Well, it is doing a 1035 exchange on life insurance products. So a lot of our clients, when they're starting, we put life insurance on them, and some advisors sell permanent life insurance. It's not something we do a lot of for everybody because it's a niche product, but they're out there, and some people really need permanent life insurance and think they're going to need it for the rest of their life. And there's some tax benefits for overfunding it, but that's not what we're talking about here. We're talking about someone who already bought life insurance, has cash value. So they bought a permanent life insurance policy. Over time, it's grown to cash value. Now they're in their 50s. They have $50,000 to $100,000 of cash value in their life insurance policy. Well, as we get older, what need do we have? And that's long-term care. So long-term care is a need that is out there. If you end up being in a nursing home, you need care, you need someone to come to your house to take care of you, you need to update your house for disability stuff, railing, stuff like that. So a lot of people, when we get older, we're going to need care. And I've got some single women clients, and long-term care is really important to them because they want to make sure they have the money to take care of themselves at the end of their life. What is long-term care for? It's for the end-of-life planning. And do you want to have a really comfortable end of life, or you want it to be not so comfortable? It also helps with planning because if we know you have long-term care insurance, we know that we don't have to plan for that in your retirement planning. We already have that insured, so we're not having to take income from your other assets to fund it. So back to what we were saying. So you have this cash value life insurance policy with money in it. And you no longer need life insurance because you've done really good, and now you've saved up and you've got all the retirement assets you need and you have all your money. So you don't need the cash value life insurance anymore, and you have the money sitting in there, but you have a need for long-term care. Well, one of the cool products that's out now that a lot of people, I don't know if they know about them, but it's a hybrid long-term care life insurance policy. So what those are they are a combination of the old long-term care insurance where you would just pay your $2,000 a year, use it, and then there'd be no money left over at the end, or no life insurance policy, or if you died, you don't get any money. Well, these new policies combine some life insurance element with long-term care. So if you buy the policy and you never use it, you have a life insurance benefit for your heirs. So at least there's some money left over. So that's a nice feature. And it also provides you with long-term care. So what you're able to do is, if you have this cash value life insurance policy that you no longer need, you can exchange that cash value tax deferred into a hybrid long-term care insurance policy. We're actually working on one of these cases right now, and our person was paying about $2,400 a year in their life insurance premium. And we're going to get rid of that. That's gone. No more payments. She had about $50,000, I think it's like $60,000 in cash value. And we're going to convert that to, when she's 80, to around $450,000 to $500,000 in long-term care benefit that she can use. So we're able to take this life insurance policy with $50,000 cash value, $200,000 death benefit, and convert it into a long-term care policy for her. And one of the neat things that happened with this is she no longer has to pay a premium. So that premium is gone. Her life insurance need is covered a little bit because she gets a little bit of life insurance, but her long-term care need is completely covered because we have that money. It might not be completely covered because she could get Alzheimer's and be in a nursing home for 14, 15 years, but it takes a huge part of the risk down because we're going to be able to give her 4 years of coverage, and that's the typical age or amount of time people spend in a long-term care facility. Yes, it could be much longer. That is a very big possibility. She might have dementia or something like that keeps her alive, or she'll die the next day. And if she dies the next day, hey, at least she has a life insurance part to this where her heirs will get some money. So it's a real big opportunity. If you'd like to talk about it, if you have cash value life insurance, We would love to talk to you about the ability to do a 1035 exchange into a hybrid life insurance long-term care plan. If you're interested, check out our blog on it. Give us a call at the office. It's a really neat thing that you're able to do, and a great time to do it is when you're between 50 and 65. That's the best time. We're working on a case for a 52-year-old. So if you have any questions, give us a call. We are here to help. We'd love to talk to you and help you with your planning. Stephen Evans with Evans Wealth Planning.